In the summer of 1999, two Stanford graduate students walked into the headquarters of Excite, one of the internet's hottest search engines, carrying what would later be recognized as the most valuable business proposal in tech history. Larry Page and Sergey Brin, armed with their revolutionary PageRank algorithm and a search engine they called Backrub, later renamed Google, offered to sell their entire operation to Excite for the bargain price of $1 million. Excite's CEO, George Bell, listened politely, then delivered what might be the most expensive no in business history. Bell thought the asking price was too high for what appeared to be just another search algorithm. Within 2 years, Excite would be bankrupt, sold off in pieces during the dot-com crash, while Google would begin its march toward becoming the most dominant force on the internet, eventually worth over $1 trillion. This is the story of Excite, the search engine that had everything going for it until it made the single worst business decision of the internet age. Excite began life in 1993 as Architext, founded by 6 Stanford University students including Joe Kraus, Graham Spencer, Ryan McIntyre, Ben Lutch, Mark Van Haren, and Martin Reinfried. The company emerged from a computer science project focused on improving internet search capabilities, initially developing statistical analysis software for searching large databases of text. By 1994, they had pivoted to web search and renamed themselves Excite, launching their search engine with the bold promise of making the chaotic early internet navigable for ordinary users. Unlike competitors who relied on simple keyword matching, Excite employed concept-based searching that attempted to understand the relationships between words and ideas. The timing couldn't have been better. The World Wide Web was exploding in size, growing from approximately 130 websites in 1993 to over 600,000 by 1996, and internet users desperately needed better tools to find information in this digital wilderness. Excite's search technology was genuinely innovative for its time, using idea-based queries and statistical analysis to deliver more relevant results than most competitors. The company went public in April 1996, raising $34 million and achieving a market capitalization of over $400 million on its first day of trading. The mid-1990s represented Excite's golden age, as the company positioned itself as far more than just a search engine. Recognizing that search alone might not be enough to build a sustainable business, Excite transformed itself into what would later be called a web portal, offering users a comprehensive suite of internet services from a single destination. The strategy worked brilliantly initially. Excite acquired WebCrawler, another search engine, for $7 million in 1995, significantly expanding its search index and user base. The company launched Excite Mail, providing free email services that competed directly with emerging players like Hotmail. They created Excite Chat, discussion forums, personalized news feeds, stock quotes, weather reports, sports scores, and even online gaming. By 1997, Excite was receiving over 50 million page views per month, making it one of the most visited destinations on the internet. The portal strategy seemed vindicated when At Home Corporation, a cable internet service provider, acquired Excite for $6.7 billion in January 1999, creating Excite at Home and valuing the search company at nearly 100 times its annual revenue. For a brief moment, Excite appeared to have cracked the code of internet profitability. However, beneath Excite's impressive growth metrics and soaring valuation, fundamental problems were already emerging that would prove fatal within just a few years. The company's focus on becoming a comprehensive web portal meant they were spreading resources thin across dozens of different services, from chat rooms to online shopping, rather than concentrating on perfecting their core search technology. While Excite was busy building a digital department store, their search algorithm remained essentially unchanged from the mid-1990s, even as the internet grew exponentially more complex. More critically, Excite never solved the fundamental challenge facing all early internet companies: how to generate sustainable revenue from web traffic. Despite attracting millions of users, the company struggled to monetize its audience effectively, relying primarily on banner advertising that commanded relatively low prices and generated modest returns. The portal strategy that had initially driven growth began working against them as competitors like Yahoo demonstrated superior execution in building comprehensive internet destinations. Meanwhile, a new generation of companies was emerging with radically different approaches to the same problems Excite was trying to solve. The stage was set for the most consequential missed opportunity in business history: The meeting that would define Excite's legacy took place in 1999 when Larry Page and Sergey Brin, two Stanford PhD students, approached Excite about acquiring their search technology company. Page and Brin had developed PageRank, a revolutionary algorithm that ranked web pages based on the number and quality of other sites linking to them, essentially treating links as votes of confidence. Their search engine, initially called Backrub before being renamed Google, delivered dramatically more relevant results than existing search engines by analyzing the web's link structure rather than relying solely on keyword matching or concept analysis. The two founders had already been running their search engine from Stanford's servers, handling over 10,000 search queries per day and demonstrating clear superiority over existing alternatives. When they approached Excite CEO George Bell with an offer to sell their entire operation for $1 million, they weren't just selling a search algorithm, but a completely new way of understanding how information should be organized and retrieved on the internet. Bell's response was swift and definitive. $1 million was too expensive for what appeared to be incremental improvements to search technology that Excite already possessed. The deal was rejected without serious negotiation, and Page and Brin left the meeting to continue building their company independently. The rejection of Google's acquisition offer represented more than just a missed business opportunity. It revealed fundamental misunderstandings about the nature of technological innovation and competitive advantage in the Internet age. Bell and Excite's leadership team evaluated Google's technology through the lens of their existing business model, seeing search as just one component of their comprehensive portal strategy, rather than recognizing it as the foundation upon which Internet dominance would be built. They failed to appreciate that PageRank represented a quantum leap in search quality that would soon render their existing technology obsolete. More significantly, they underestimated how dramatically superior search results would translate into user preference and market share. From Excite's perspective, they already had a working search engine serving millions of users. Why pay $1 million for what seemed like a marginal improvement? This thinking reflected a common trap in established companies where incremental thinking prevents recognition of truly disruptive innovations. Bell later admitted that even if Excite had acquired Google, they probably would have integrated the PageRank technology into their existing search engine rather than recognizing it as the foundation for an entirely new approach to organizing the world's information. The rejection wasn't just about money, it was about vision, and Excite's vision was already locked into a failing strategy. The dot-com crash of 2000-2001 exposed the fragility of Excite's business model with devastating clarity. As internet advertising revenues collapsed and investors fled dot-com stocks, companies like Excite, that had never achieved profitability, found themselves in an impossible position. The merger with At-Home, which had seemed like a masterstroke just 2 years earlier, became a liability as both companies struggled with overlapping costs and conflicting strategic priorities. At-Home's focus on providing cable internet service to consumers created constant tension with Excite's portal ambitions, leading to confused messaging and diluted resources. By 2001, Excite At-Home was burning through cash at an unsustainable rate, losing over $1.4 billion annually while revenues stagnated. The company's stock price, which had peaked at over $95 per share in 1999, collapsed to under $2 by late 2001. In September 2001, Excite At-Home filed for bankruptcy, officially ending Excite's run as an independent internet company. The portal that had once attracted 50 million monthly visitors was sold to iWan for just $10 million, a fraction of what the company had been worth just 3 years earlier. The bankruptcy marked the end of an era and validated the harsh reality that traffic alone, without sustainable monetization, meant nothing in the internet economy. While Excite was disintegrating during the dot-com crash, Google was demonstrating exactly how a search company could build a dominant and profitable business. After being rejected by Excite, Page and Brin had continued developing their technology, officially incorporating Google in September 1998 with $100,000 in funding from Sun Microsystems co-founder Andy Bechtolsheim. The company's breakthrough came not just from superior search results, but from recognizing that search intent represented incredibly valuable commercial information. Google's AdWords advertising system, launched in 2000, revolutionized internet advertising by allowing businesses to display targeted ads based on specific search queries. This created a sustainable revenue model where advertising effectiveness was directly measurable, and businesses were willing to pay premium prices for ads that reached users actively searching for their products or services. By 2001, while Excite was filing for bankruptcy, Google was generating over $80 million in annual revenue and achieving profitability. The company's focus on search excellence, rather than portal breadth, allowed them to continuously improve their core technology while building an advertising business that scaled with their growing user base. Google's success validated a completely different approach to internet business. Dominate one service completely rather than offering many services adequately. The contrast between Excite's collapse and Google's rise illustrates fundamental lessons about innovation, focus, and the importance of recognizing truly disruptive technologies. Excite's failure wasn't simply about making one bad decision. It was the result of strategic choices that prioritized short-term growth over long-term technological leadership. The portal strategy that had driven Excite's initial success became a trap that prevented the company from recognizing how dramatically the internet landscape was evolving. By 2004, Google's initial public offering valued the company at over $23 billion, making the rejected $1 million acquisition offer look even more catastrophic in hindsight. Today, Google's parent company Alphabet is worth over $1 trillion and processes over 8.5 billion searches daily, controlling approximately 92% of the global search market. Excite still exists as a minor web portal, generating minimal traffic and serving as a digital ghost of internet history. The story serves as a permanent reminder that in technology, the difference between revolutionary and incremental innovation can be difficult to recognize in the moment, but the consequences of misjudgment can be permanent. George Bell's rejection of Google's acquisition offer stands alongside other legendary business mistakes like Kodak's dismissal of digital photography or Blockbuster's rejection of Netflix, representing moments when established companies failed to recognize the technologies that would ultimately destroy them. The Excite story resonates today as technology companies face similar choices about emerging innovations in artificial intelligence, blockchain, quantum computing, and other potentially disruptive technologies. The same patterns that led to Excite's downfall continue to appear. Successful companies becoming trapped by their existing business models, evaluating new technologies through outdated frameworks, and prioritizing incremental improvements over revolutionary changes. Excite's leadership team wasn't incompetent or lazy. They were intelligent people who built a genuinely innovative company that served millions of users and generated hundreds of millions in value. Their mistake was assuming that current success predicted future relevance and that technological leadership could be maintained without constant reinvention. The internet age has accelerated the pace of creative destruction, where yesterday's innovation quickly becomes tomorrow's obsolete technology. Companies that survive and thrive are those that maintain what Intel's Andy Grove called paranoid awareness of potential disruptions and willingness to cannibalize their own success before competitors do it for them. Excite's tombstone in tech history bears a simple inscription. Here lies a search engine that had everything except the vision to recognize its replacement was worth $1 million.